and the gauges in your MMT platform there, if you look in your RPMs, if those RPMs are going higher, well, you're going higher with your entry. And guess what? When it's time to start downshifting, you'll be selling out. That's what you'll be doing, making a market with the public. Okay? And we have lots of things going on. You've got things like, let's take a look here, S&P 500 short, very narrow range, but watch this. Google. Bingo, down huge. It was at 621 pre-market. They've already started to buy that one off the bottom. Apple, once again, bingo, was 344, 343 in here. Watch that one there. Stop market orders get taken out below the market and on the opening bell. That's where you can go down another 3 or 4 teenies. Half delta, look in the brain. Delta gap down, half delta gap down. Negative ratio side, understand that side. Remember, what the platform was designed to do as a market maker for you was to get that best negative ratio and sell it back at a negative ratio. But, you make the turn and you sell it there. So if you buy a delta down and sell back a half delta, that's a nice move off the bottom. Goldman Sachs down at $1.85. Okay? So what I want people to understand is when you take a look at the Netflix trade, well, take a look at it. 235, it was lower in pre-market, but this is all the pre-market action right now. Yeah, it is. CMG, we've been short at 270, bloated stock. Okay? No one said it wasn't a good stock. It's just bloated in the prices, just like the indexes. And it takes a significant emotional event to create price action volatility, which would be a forward-looking increase. After today's just starts it out. Today's kickoff day in price action volatility. And it's here to stay. Forward-looking. One of the things we'll be looking for is that flash traders being in the market and whatnot. All right, another thing, MMTs, keep a watch on POT and Monsanto on pullbacks. One of the things that FedEx is gapping down, remember, hey, jet fuel would cost more money, and I said that FCX is gapping down. That's that gold and copper stock, minus 1.35 ratio. It ain't got no support till it gets to 48. That was a short after the split down. CMG gapping down big. Look at your Amazon. Now, what happens, MMTs, that left elbow, and you've seen me trade thousands of them, the new MMTs, there's nothing better than being in at the left elbow. And you take out the previous 3-minute price action bar, and you're ramping up in that IR to 50. And you got to hit it quick. And as long as you don't break a double bottom teeny line, you're good to go. And if you follow the rules, right after you place the order, you know it's mandatory stop market. Good luck. We are going to have a lot of fun. NASDAQ comp, Netflix down 911, TQQ, the bull getting whacked. And here comes Johnny Go Lucky, Apple down 6.5, Google 6.6 pennies price line. Look at them all. Look at all the high flyers, and options expiration just ended, and how ironic for the headline event. Because I'm going to tell you what, forward looking, it's going to be days like this that start the reversal, but then you're going to have days just the opposite as well, forward looking. And that's what price action volatility is about, and how to make some coin on those moves. And just remember, MMTs, if it's a left elbow, 36912, slide that last bar on the upside, and I'm sliding below half of that bar, and I can't close above it. Well, then I'm got to get net short, and if the ratios go from low to high, and then they turn and start to go back the other way, that's where the net short gets placed, MMT. Let it be known on this day. NASDAQ comp. Left elbows are here. in the ratio gap. We'll have Brian Plain copy this in an Excel